While everyone has been staring at the Red Sea, obsessed with the Middle East, or arguing about what China is doing in the South China Sea, the actual kill shot for the American economy just appeared in the one place nobody was looking. It didn't come from an enemy. It didn't come from a rival. It came from our polite neighbor to the north. We are currently watching a disaster unfold that is so quiet, yet so mechanically destructive, that by the time the average person realizes what has happened, the damage to their portfolio will be irreversible. The media is calling this a trade dispute. They are calling it a negotiating tactic. But what I am about to show you is not a negotiation. It is a demolition. We are witnessing the start of a domino effect that begins with a 25% tariff and ends with the collapse of the North American supply chain. This is the polite crisis. The crisis that nobody thinks will actually happen because surely cooler heads will prevail. Surely we wouldn't blow up our own energy grid just to make a point. But I'm here to tell you that the detonator has already been pressed. The shifts are already being paused in Michigan. The lawsuits have already been filed in Washington. And the list of goods that are about to double in price has already been drafted in Ottawa. For the next 20 minutes, we're going to look away from the distractions. We're going to ignore the noise. And we're going to focus entirely on the mechanics of this self-inflicted disaster. We will trace the chain reaction from the first tariff tweet to the final impact on your 401k. And most importantly, we're going to build a crisis portfolio, a specific set of 6 assets designed not just to survive this trade war, but to profit from the fragmentation of the global order. This is not politics. This is physics. When you push a domino this large, the ground shakes. Let's look at the first domino, the one that everyone assumes is glued to the table. Energy. Most Americans have a fundamental misunderstanding of where their energy comes from. We hear phrases like energy independence, and we assume that means we produce everything we need right here at home. That is a dangerous illusion. The reality is that the United States energy grid is dangerously codependent on Canada. We import more oil from Canada than we do from all OPEC countries combined. Think about that for a second. We are terrified of instability in the Middle East, yet we are actively picking a fight with the supplier that provides the lifeblood of our refinery system. But it goes deeper than oil. It is about electricity. The lights in New York, the factories in New England, the data centers that run the stock market, they're all powered, in large part, by hydroelectric power flowing down from Quebec. This isn't just a commodity you can swap out. You cannot simply buy electricity from Saudi Arabia. It is a physical grid. It is hardwired. If this tariff war escalates and Canada decides to weaponize their energy exports in the same way we are weaponizing our consumer market, the result isn't just higher gas prices. It is rolling blackouts in the Northeast. It is refineries in the Gulf Coast shutting down because they cannot get the heavy crude they are designed to process. This is the first domino, an energy shock that happens not because of a war overseas, but because of a policy decision in Washington. And when energy costs spike, everything spikes. Food, manufacturing, transport. It is the inflation accelerant that the Federal Reserve cannot fix. They can raise interest rates to the moon, but an interest rate hike does not generate more electricity. Now, watch the second domino fall, the supply chain snap. This is happening right now. As I speak, auto plants in Michigan are pausing shifts. Why? Because the modern automotive industry does not see borders. A single car part might cross the US-Canada border 6 or 7 times before the car is finished. It is a fully integrated ecosystem. When you slap a 25% tariff on everything crossing that border, you aren't just taxing a finished product. You are taxing every step of the assembly process. You are pouring sand into the gears of the most complex machine in the American economy. The Chamber of Commerce knows this. That is why we saw something unprecedented on December 12th. The U.S. Chamber of Commerce, the biggest lobbying group in the country, The group that usually cheers for tax cuts and deregulation turned around and sued the president. This is a signal that you cannot ignore. The business party is at war with its own leader. When the people who own the factories are suing the government to stop a policy, it tells you that the internal data they are seeing is catastrophic. They aren't doing this for political points. They're doing this because they're looking at their spreadsheets and seeing insolvency. This lawsuit is the sound of the old order breaking. It is the sound of the corporate elite realizing they have lost control of the monster they helped create. And while they fight in court, the assembly lines stop. The inventory dries up, and the price of new vehicles, which was just starting to stabilize, prepares for another leg up. But it gets worse, because Canada isn't just sitting there taking it. That brings us to the third domino, targeted retaliation. The Canadians are polite, but they are not stupid. They understand the U.S. political map better than most Americans do. They have released a retaliation list that is surgically precise. They aren't just taxing random goods. They are targeting bourbon. They are targeting dairy. They are targeting wine. Why these items? Because they come from specific districts. They come from swing states. They are designed to inflict maximum political pain on the very people who support the tariffs. This turns a trade dispute into a domestic political civil war. Imagine the dairy farmers in Wisconsin and the distillers in Kentucky suddenly losing their biggest export market overnight. They will demand a bailout. And where does the money for a bailout come from? It comes from the printer. We are back to the same trap. Every problem in this economy eventually leads back to the printing press. To solve the damage caused by the tariffs, the government will have to print more money to subsidize the industries they destroyed. It is an inflation loop. Higher prices from the tariffs, followed by more money supply from the bailouts. And this leads us to the fourth and perhaps the heaviest domino, the psychological break. For decades, the world has operated on the assumption that the United States is the stable center of the global economy. We might have disagreements, we might have spats, but at the end of the day, the North American bloc was unbreakable. That assumption died this month. When you threaten your closest ally, your biggest trading partner, and your primary energy supplier with economic warfare, you're telling the world that the United States is no longer a reliable partner. You're telling them that stability is gone. This accelerates the move away from the dollar. If Canada, of all countries, can't trust the U.S. trade agreements, who can? If you're Japan, if you're South Korea, if you're Europe, you're looking at this and realizing you need a backup plan. You need to diversify. This is why we're seeing central banks buying gold. They aren't just hedging against inflation. They are hedging against American political volatility. They are buying insurance against the realization that the rules-based international order is being shredded by the very country that built it. So, why do people still think this is a bluff? Why is the stock market hovering near all-time highs while the supply chain is being dismantled? It is called normalcy bias. It is the psychological refusal to believe that disaster is coming, even when the smoke is filling the room. We have lived through so many crises that turn out to be nothing that we have become numb. We think, oh, they'll work it out. They always do. But the math is different this time. We are entering this trade war with $38 trillion in debt. We are entering it with a manufacturing base that has already been hollowed out. We don't have the leverage we had in the 1980s. We cannot simply demand the world bend the knee, because the world has other options now. The market is pricing in a soft landing and a deal. It is ignoring the structural damage that is being done every day. This uncertainty continues. Companies are canceling investments. Contracts are being torn up. The trust capital, which takes decades to build, has been incinerated in a week. So what happens when the market wakes up? What happens when the first earnings reports come out showing the impact of the paused shifts and the energy spikes. We get the domino crash, the repricing, and this is where you need to be positioned. Most people will be paralyzed. They will watch their tech stocks drop and wonder what happened. They will complain about the price of gas and wait for the government to fix it. But you're going to be ready. You're going to build the crisis portfolio. This portfolio is not designed for a growing economy. It is designed for a fragmented, volatile, inflationary world where alliances are broken and resources are scarce. We are going beyond the standard advice. Yes, you need the foundation, but you also need the growth engines that thrive on chaos. You know this, but let's reframe it. You're not buying gold to get rich. You are buying gold because it is the only asset that is not a liability of a chaotic government. When the US and Canada are fighting, the counterparty risk of the dollar goes up. Gold has zero counterparty risk. It is the neutral reserve asset. Silver is the aggressive play here. As the supply chains break, the mining supply of silver, much of which comes from the Americas, gets disrupted. Yet demand for solar and electronics is inelastic. A supply shock in silver, combined with a monetary panic, is the recipe for a vertical move. Asset number 2, the escape hatch, Bitcoin. I know the volatility scares some of you, but look at the chart. Bitcoin feeds on dysfunction. When the banking system wobbles, Bitcoin rallies. When governments weaponize their currencies, Bitcoin rallies. It is the only digital asset that cannot be blocked by a sanction or inflated by a central bank. In a world where trade wars turn into capital controls, having a portion of your wealth in a borderless, censorship-resistant network is not speculation. It is survival. But now, let's get into the assets that specifically profit from this North American fallout. Asset number 3, domestic energy producers. If Canadian oil gets tariffed, the price spread between WTI and Western Canadian Select blows out. The U.S. refiners will be screaming for domestic crude. The companies that produce oil and natural gas within the borders of the United States become strategic national assets. We're talking about the producers in the Permian Basin, the natural gas giants in Appalachia. In a world of energy insecurity, these companies effectively print money. They are the hedge against the blackouts. If your electricity bill doubles, you want your energy stocks to triple. Asset number 4, defense and cybersecurity. When alliances fracture, spending on security explodes. We are entering a period of low trust. That means every nation, every corporation needs to defend itself. The U.S. government will ramp up defense spending to project power in a world where its soft power is failing. But the real growth is in cybersecurity. A trade war in 2025 isn't just about tariffs. It's about digital sabotage. It's about corporate espionage. The companies that build the digital walls for the banks and the grid are going to see massive contract growth. This is a recession-proof sector because security is not a discretionary expense. Asset number 5, productive farmland. Look at the retaliation list again. Dairy, wine, food. When trade wars hit food inflation sticks. And unlike a tech stock, farmland produces a commodity that humans physically cannot boycott. But it is also about the currency. If the dollar loses purchasing power, real estate is the traditional shield. But commercial real estate is collapsing, and residential is in a bubble. Farmland is the undervalued asset class. It yields a product, it hedges inflation, and they aren't making any more of it. If the global food trade fragments, domestic food production becomes the most valuable real estate on the continent. Asset number 6, uranium. This is the long-term play. If the U.S. can't rely on Canadian hydro, and if we can't burn coal because of regulations, and if wind and solar are intermittent, where does the baseload power come from? It comes from nuclear. There is a bipartisan recognition that the grid is fragile. The only way to fix it without Canada is a massive build-out of nuclear capacity. Uranium is the fuel for that transition. It isn't a structural supply deficit. The price has to go higher to incentivize new production. This is the asymmetric bet on the future of the energy grid. So there you have it. The domino effect is in motion. The polite crisis is here. The tariff threat was the finger push. The energy shock is the wobble. The supply chain snap is the fall. The majority of investors are still playing by the rules of 2015. They are buying the dip on the S&P 500, assuming that the Fed has their back and that free trade will resume. They are sleepwalking into a buzzsaw. You have the map now. You see the chain reaction. You understand that when the business party sues the president, the game has changed. The question is, are you going to sit there and hope the dominoes stop falling? Or are you going to step out of the way and position yourself where the pieces land? This is not the time to be passive. This is the time to be deliberate. The polite crisis will not be polite to your savings. I want to know what you think. Look at the retaliation list from Canada. Do you think this trade war will be resolved before the midterms? Or are we looking at a decade of fragmentation? And more importantly, which of the 6 assets in the crisis portfolio are you most bullish on right now? The greatest wealth transfer in history has already begun. And in this game, there are no spectators. You are either at the table, positioning your assets for the new reality, or you are on the menu, waiting to be devoured by inflation and incompetence. The mainstream media relies on your distraction. They need you to stay asleep at the wheel so you could be the exit liquidity for the system they broke. But we're building something different here. We are building a fortress for the few who refuse to be collateral damage. By subscribing, you aren't just clicking a button. You are joining an intelligence network of survivors who see the storm coming and are bold enough to prepare for it. Do not keep this intel to yourself. Send this briefing to the one person you know who is smart enough to understand it, but too distracted to see it coming. Wake them up. Arm them with the truth. The polite crisis is over. The real fight for your financial future starts now. Stay sharp. I'll see you in the next one.